Hey everyone, and welcome to this week's On the Spot. I'm Zach Strickland here with, as usual, John Paul Hampstead, our Director of Passport Research at FreightWaves. And, you know, we haven't been here in a few weeks, JP.
Right.
Things have, I know this may be shocking, but things have changed yet again.
What?
Yeah.
The trucking markets?
Yeah, the trucking markets, of course, changed. The world has changed. Again, hopefully everybody had a good July 4th weekend. But, you know, you guys, you lead up a group of the Passport Research team, and they do some pretty interesting stuff. Like, what are some of the more interesting things that you guys have come across here in the last couple of weeks that you could bring some attention to that I think will help people understand more about, you know, what the market's doing, how it's interacting with other pieces? What are some of the stats that you guys are looking at?
I think the first thing to talk about, so I want to talk about two things really quick. One is some work that we did looking at June and really trying to figure out if it diverged from previous years and by how much. And then the second thing I want to talk about what's happening now, specifically in Dallas and a couple other cities and what that might mean for going forward. But you know, one of the things that we engaged in a lot of discussion with Passport clients. We talked to analysts and operators on social media and things like that, just trying to continually sync up our view with the fundamental kind of market dynamics, right? And we noticed that a lot of people in the lead up to the July 4th holiday, we're kind of saying that, okay, we expect rates to go up into the holiday. That's normal. We expect capacity to tighten going through the holiday. That's normal. You know, when you seasonally adjust everything out, nothing is really going on, right? It's kind of the message that a lot of people told. But that wasn't really, you know, that didn't jive with me just from my conversations with brokers. When I hear a broker tell me that he lost $3,200 on a single load, I'm like, that's not normal seasonality. He doesn't think that's normal. He doesn't plan for that.
Because he would, of course, you know, nobody's going to lose that kind of money without extreme volatility.
No one's going to lose that kind of money on purpose. No one plans to lose that kind of money every year, right? So
extreme unexpected volatility. And seasonality is typically expected volatility.
Correct. And so we went back and looked at the data, and it turned out that no, you know, the DAT national average for line haul dry vans tends to peak in the summer in the first 2 weeks of June and then go down into the holiday. And so even leading, you know, we talked a lot about how we didn't know what the market was going to look like after July 4th, but even before that, it had already diverged significantly from previous years. Tender rejections were much higher. Rates were even higher than in June of 2017.
Yep.
So that's like, we're seeing a lot of signals showing that, you know, regardless of whether we go up from here or we stay at the same levels, we're already at a pretty inflationary stage compared to the previous couple of years. So that's the first thing that we really looked at, is that, like, yeah, June was a pretty wild month.
It wasn't like, you know, I think we even talked about it briefly here, and then on Freight Forecasting with Mike Vincent, we had a discussion about through the first couple of weeks of June, it looked like we've returned to seasonality. All that appeared to be, actually looking back now, was really just where it kind of just passed over the seasonality as it was recovering. Because again, we were in this recovery process. Volumes were still coming up, you know, and basically it looked like, oh, here we are, just hovering around what we would potentially normally see, which is about a 5 to 10% increase in volumes. Rejection rates had not expanded dramatically until halfway through June.
Right.
We were still sitting around 6-7% outbound tender rejection rate about June 14th. And now we're sitting up above 15%, you know, and apparently it's still starting to rise, but we'll get into that in a minute.
Yeah, and just the other thing that we worked on this week, really looking really closely at temperature-controlled transportation markets, reefer markets, right? We do this every month. One of our clients requested that we cover reefer markets, so we do that for them, and of course all of our clients get the benefit of that. But we're also looking at it closely because, if you remember, reefer volumes led the initial COVID surge in March, right? It was a lot of short haul or city length of haul reefer volumes consistent with the replenishment of grocery store inventories that that was a contributor. We saw it across dry van, we saw it for long haul as well as short haul, but the most upwardly volatile was certainly short haul reefer. And so what we were looking at is like, okay, we know that there's a second wave of COVID infections right now. We know that we're getting a record number of COVID infections, and that positive test rates are rising, right?
Mainly across the Sun Belt region, which is like Arizona, Texas, Florida.
Los Angeles as well. Actually,
Los Angeles.
So we looked at Los Angeles, Phoenix, Dallas, Houston, Atlanta, and Miami, which all have pretty bad COVID problems right now. And we're looking for evidence that reefer volumes in those markets are elevated and that capacity is tighter than normal. And that certainly seems to be the case in Dallas, where in Dallas County, daily COVID infections have been over 1,000 for about a week, and that's started to significantly affect. And so the governor of Texas, closed the bars, limited the restaurants to 50% capacity. That's caused a surge in consumer food buying again.
Right.
And
because everybody's concerned that again they'll have to go back into their houses. There could be the risk of a shutdown yet again, et cetera.
Right. And so we actually view and reefer volumes are way above normal, comparable to the March levels, right? And so we're worried that could signal what's going to happen in other Sunbelt metropolitan areas, like the ones we just named, and that it could be a negative signal for economic activity in other sectors if people do in fact have to self-isolate again in their homes. So that's something we're keeping an eye on. Just if what's happening in Dallas gets replicated across the South,
other cities,
that's a pretty bad sign.
Yeah, I think it'll be interesting to watch, because whereas in March it was kind of nationwide, the shutdown. Now we're watching the potential shutdown, in specific cities, because obviously it's very difficult for companies to open, close, reopen, then close again. That's a very difficult process to manage. We're already hearing stories of carriers having a lot of difficulty managing the variation between states,
right,
on how their operations are varying significantly. So they'll go to one shipper / consignee that they're expecting a 30-40 minute wait time, unload time, whatever they're doing there, and some of those are taking longer than expected, and some of them are just not open. They're not as active. They're not available.
Right.
So it's causing a lot of disruption to carrier networks out there, which again we expect to manifest in a lot of these tender rejection rates here in the month of July, especially now that we necessarily don't have to have another shutdown for it to be disruptive to the market, kind of like we're seeing now.
Another example of the kind of state-specific disruption to logistics operations that's happening because of COVID is Governor Meg Whitmer of Michigan just released this executive order requiring all meat plants in the state to reconfigure their operations so that every worker is at least 6 feet away from every other worker. Now, if you've ever been in a meat plant, I mean, the way that the lines are set up, it's pretty much elbow to elbow.
You can't, and that's the problem here, is that you can't change your infrastructure that's been built on this. Like, these are factories, these are plants. They can't have mechanical engineers write up plans, build up that plant a certain way, and then change it overnight.
Right.
That's not how it works. They either have to, figure out a way to work within the infrastructure, the existing infrastructure in this manner, or shut down.
Yeah, there are a number of plants in the Midwest, especially in Iowa and Minnesota, that had opened up with limited operations. A lot of times it just means running, basically you take out every other worker, right? Yeah. And then you run the line at half speed.
And that would be an example of operating within the confines of the existing infrastructure.
Right. And so that's a lot of kind of what they're trying to get away with, and how they're trying to interpret these rules. But even that, it's then what you have is you have plants that maybe they run an extra shift, right? And so they're open later. So all of your appointment schedules and the way that network works is completely changed. The way that you're going to have to clean your trailer in the middle of the night or something like that is very different.
Oh yeah, the pickup times. Now you have different windows for picking up versus, also delivery.
Yeah, and so like, even just the attempts to keep these plants operating safely is very confusing. And this is one state. This isn't Wisconsin. It's not Indiana. It's just Michigan. Exactly. And so it's another example of how we could. And I expect that we'll probably see more of these types of orders. I don't know where or when they'll come from, but it's certainly not the last we're going to hear about things like this. So that's just another example of the kind of confusion that this sort of decentralized and uncoordinated response to the virus has caused in supply chains.
Yeah, we've really not seen a very consistent message to this point on how to handle it. We haven't seen a lot of consistent policies because each area of the country obviously is having its own exposure levels, its own caseloads, et cetera.
Its own population densities, its own vulnerable populations, its own geography.
And you shouldn't apply the same methodology to New York City that you would apply to Southern Alabama.
Right.
It doesn't make any sense.
Right. Different risk factors with regard to public transportation, et cetera, et cetera. So it's like, the fact that there are state and local policies, it does make sense, but it makes it difficult for national transportation providers.
Operators. And
we should talk about, though, markets now and what we're seeing now, right? Which essentially is that capacity remains tight. A week after the holiday, tender rejections are still elevated above 15%. In fact, they went up on Wednesday or Thursday, actually.
Yeah. I think the important thing here is that we're now, like you were mentioning earlier about how we've diverged from seasonality. We were kind of waiting to see, okay, so tender rejection rates increased into the holiday and now they were coming back down, but then all of a sudden yesterday, a few days ago, they stalled out again and now they're moving back up, which that is an extreme anomaly in terms of diverging from what we would traditionally see seasonally.
And this is supported by very robust volumes. So they came down a little bit after the holiday, but where they're settling in is unusually high.
Yeah.
So it's not just a question of are the trucks in the right spot or are there too few trucks. It's also being driven by high levels of freight volumes.
And I looked at this yesterday on FreightWaves Now, and the reefer rejection rates are driving a lot of this. Reefer capacity appears to be tightening, like you were mentioning with Dallas. It does appear to be in the Northeast as well. The Northeast has been one of the more stable environments for reefer carriers in the last month.
Interesting.
And now that's starting to pick back up. Their rejection rates are now increasing again. Again, during produce season, you have a pretty consistent flow of freight coming from the West Coast to the Northeast for reefer carriers and reefer activity because you have produce and all this stuff coming across the country. And that oversupplies the market. And the Northeast is traditionally kind of a low rejection rate area.
Right, and they're not, and in April and May isn't a harvest season in New England.
No. And so a lot of those carriers will also just try to reposition their trucks out west. Well, now we have an increase of short haul reefer freight in the Northeast, and they're trying to get back out west.
Yeah.
Or down south or somewhere where they can haul long haul freight for 10x margin.
Yeah.
Right. And that's creating, it's starting to show up in the Northeast. So anybody operating up there, and it has customers up there, definitely need to be on the lookout this week for that.
That's interesting. So it's it just seems like I think there are really two things going on in the market. One is the COVID-related disruptions are continuing to evolve in surprising ways. I mean, and I say surprising, I mean, they all make sense in retrospect, but it's very difficult to predict.
Exactly.
No one can predict the course of the virus. No one can predict the policy response, which is derivative of that, and no one can predict business and consumer response, which is derivative of that. So it all makes sense in retrospect, but it continues to evolve in surprising ways. It means that transportation providers have to talk very closely to their customers, their carrier partners, et cetera, on a weekly, if not daily basis.
Exactly.
The other thing is that we also believe that trucking capacity is meaningfully diminished from the prior 2 years. and that's just making the market more sensitive in general as well. So it's COVID disruptions and a market that's on more of a hair trigger than perhaps it was last year.
Yeah, there's a lot of volatility for sure. Well, that'll do it for this week's On the Spot. Thank you for watching, and thank you, JP, for joining me this week. And be sure to check out FreightWaves.com for any future freight market updates. Have a great week.